Ashur is a private client who allowed me to review his video for you and upload it to the membership site. So he sent me his MP4 file. We're going to take a look at it now. I'm going to critique his trading for the day just the way I would to his, just for him, but also I'm going to be sharing with you some detailed information that I haven't made available anyplace else. So, but he has agreed to share my critique and his video of trading today with you. So let's get into the video, and then I'm going to go ahead and start the critique like I normally do when I would send it to him for comments. All right, so we start out at the beginning of the day. It looks like he's already got a position on. He's long one of the YMs. He's short one of the NQs. So he's doing a volatility arbitrage NRT3 trade with just the YM and the NQ using the scripts that I gave him. Now, private clients, I am giving private clients the scripts that Market Timer came out with, including the supply-demand script, the strength script, and the Market Timer XL arbitrage script for use with the training for private clients. So what I'm doing is I'm reviewing what he's doing at this point in time. It looks like he already has this on, so he started the recording. And let's see what he does at this point. Now, in reviewing this, he's already long the YM and short the NQ. And if I was to take a look at this position, he's absolutely correct in his assessment. We've got the momentum, the blue line starting to head down, and the current price is below that. He has a little bit of an uptick on the oscillator, but the super pass band filter is heading down, and it's in an upward position, and it's above the zero line, so it's heading down at this point. The only problem I see is that he's got the arbitrage script right now is pointing up, but I believe this is before the open. So he's got this, he cut off the time here, but he has it above it right now. It's before the open. Generally, I don't like entering trades before the open because right at 9:30, there's two periods of time in which the market can change very, very quickly. And that is at 9:30 and 3:30 in the afternoon. Those two time periods seem to have a change in direction for the YMNQ arbitrage trade. So let's just go through this and see how he does. And what I'm going to do is I'm going to speed this up just so that we have, we can get it a little bit faster because he's got about 2 hours worth of video here. All right, so he's long and he's making money. So but the it looks like the market is open and we've got the arbitrage scripts pointing downward. So unless he's very, very quick here, he probably should exit this position. We also have the Market Timer Strength YM down, and we have the Market Timer Strength on the NQ higher. So it looks like the YM is going to be weak, and the NQ is going to be strong. So let's see what we get here. So he's getting a little bump up here. He's getting a little bit of a bump up here. He's actually making fairly decent money. He's up about $200 for the day, about $195. So you can see exactly here that he's up 125 for the day on the YM and up 70 on the NASDAQ. So far so good. But it looks like, wait a minute, he switched his position. Okay, so he was long here, and he must have seen the arbitrage script pointing downward. So he switched his position. All right, let's go forward here. Yeah, he exited his long position. All right. He made a mistake here because he's now short the YM 1 contract and he's long the NQ2 contracts. Okay, so typically what you want to do is you want to be careful when you press the buy market, sell market buttons, not to overdo it, because especially in the early trading, when you press those buttons and it doesn't look like you've got a position, it just means that the market is slightly delayed. So you don't want to press it twice, and that's exactly what he did here. All right, so now he got out of that position, but it actually worked in his favor. He's up about $170 so far. So right at this point, we're looking at the super bypass filter declining. We've got an up oscillator on the arbitrage. We've got a down oscillator on the market timer XL arbitrage script. And at this point, the strength index is indicating that the Dow is down, but the NQ is up. So that's on positive territory, that's negative territory. So if anything, at this point, you should be short the YM contract and long the NQ contract. Short the YM contract, long the NQ contract for a lot of different reasons. Number one is this is pointing downward. Number two, you're below the blue standard deviation momentum line. And number three is that the arbitrage script for market timer XL is pointing significantly downward. Yeah, okay, that's a good idea. I definitely do not show the wicks. I hate the wicks, especially when it comes to the YMNQ. They distract me, so you're very smart in going to a candlestick without the wicks. Okay, number one is you should already be in a short position. So you should have already sold the YM and you should have bought the NQ. You can see that the YMNQ here on the arbitrage trade is already declining here. You've got a negative on the oscillator. You've got the super pass band filter declining, and you've got the arbitrage script pointing down. You should already be in a short position. You should not be long here. You should not be neutral. You should be short. All right, now you've made a huge mistake. You've gone from a 1 hour chart on the arbitrage script from an hour to 15 minutes. That is a mistake. Do not switch between time frames. If you're going to be on an hour chart for the YMNQ trade, and you're going to be on the oscillator on the 1 hour chart, you're going to be on a super pass band filter for a 1 hour chart, do not change to the arbitrage script for a 15-minute chart. You want to be on a 1 hour chart as well. Now, they are separate because you can change time frames, but you want to be on a 1 hour chart for the arbitrage script because you want them all to align in the time frame. If you change that, then you're basically looking. If you're looking at two different time frames, it's really confusing because the 15-minute might be short, it might be long. The 1 hour might be short, might be long, and they conflict with each other, and it's just going to cause more confusion for you. So you don't want to do that. So now it looks like you're ready to sell at the market, okay, the YM, and you're going to buy the NQ, but it's already, I'm not saying it's too late, but I'm saying that you missed a good deal of the move already. You should have been short the YM and long the NQ before this time period. Especially when you see the strength indicator indicating that the NASDAQ is higher, and the YM strength indicator is kind of basically negative here. You want to be short the YM and long it. Everything had lined up. You've got the price declining below the standard deviation momentum line, below the superbase filter. You've got the arbitrage script pointing down. Everything is aligning here to take this position short. And a short volatility arbitrage on the YM and Q means you short the YM, you long the NQ. Everything is aligning here. Everything is you should have been in a short position already for volatility arbitrage. Okay, well, at least you're thinking about it. Looks like you're thinking about it. You got your mouse hovering over the sell button already. I can tell that you want to take that position, but you should have done it by now, long before now. Why are you hesitating? That's my question. Now you take it. Okay. Okay, now you're short YM. You should be long the NQ. There you go. You missed a good part of the move, but you made the right decision because the arbitrage script is still pointing down. Super bypass filter is pointing down. You've got the strength indicator pointing up for the NQ and down for the YM. So at least you're in a short, you're on the right side of the trade right now. You should have taken the position before this though. Okay, now you're getting out. So let me back this up just a little bit here. I'm not sure what you're seeing to get out of this position. You've got a negative strength indicator on the YM, so you should be short. You've got a positive number on the strength indicator for the NQ, so you should be long. You've got a declining YMNQ price. You've got a negative market timer arbitrage oscillator. You've got the super bypass filter declining. And you've got the short-term market timer XL arbitrage script declining. So I'm not sure why you're getting out of this position. I am sorry, but you've made a huge mistake here. You should stay short. I'm not sure what you're looking at to determine to get out at this position at this point in time. So now you're out of your position and everything is absolutely perfect for a short one. Short YM, long NQ. I'm not seeing what you're seeing here. There's absolutely no reason to get out of that position. None. All right, the only thing that you may have thought of is the supply-demand index. The supply-demand index is going up on the NYSE and it's going down on the NASDAQ. Okay, those are very, very short-term indications. What you really want to do is you want to look at the strength indicator. If the strength indicator is down on the diamonds, and it's down and it's up on the NQ, then you want to stay in that short position. So maybe what you're seeing is this supply demand starting to pick up, and the supply demand on the NASDAQ is starting to decline. But those two indicators are used only for scalping. Do not include them in your decision-making process for being in the volatility arbitrage trade between the YM and NQ. So if that's what you were thinking, if you saw that, that is not part of your decision-making process. And maybe you should eliminate those altogether if you're only going to be doing the arbitrage trade. All right, let's go fast forward. I mean, you were right in the short term. The YMNQ did recede a little bit. It didn't continue to go lower. But at the same time, you've got the strength index here declining even further, and you've got the strength indicator on the NQ increasing and the YM decreasing. So the best position would be to stay in your short position, short YM, long NQ. And there it is. So now the indicator, it looks like it's ready to break, continue to break downward. The arbitrage script continues to go lower. This is going to continue to go lower. We've got a lower YM down 80 points now, and the NASDAQ is up 15. So you missed a significant amount of profit. It looks like, I didn't catch that, but it looks like you saw that and you started getting back into, you got back into the position. So let me fast forward and see where you got in right there. So you missed a good deal of this move here by getting out of your previous position. So right now I can tell that you're over trading. You are over trading. You are taking too many positions that don't need to be made. You should have stuck with your original position. All of the same indicators. The oscillator is down. Super bypass filter is down. Arbitrage script is down. Strength is down for the YM, and it's up for the NQ. You're basically wasting money on commissions. And so, I mean, at this point, since the beginning of the day, you should have been in a short position, and you've already traded about 7 contracts. You traded 3 contracts on the YM, 4 on the NQ, soon to be 4 on the YM. So you've already gotten to the point where you are over trading. You should not be taking more than 1 or 2 pairs, maybe 3 pairs a day at the most. So now you get in, you are short YM, you see that the momentum is still building to the downside here. Everything is pointing downward, and that's exactly the position that you should be in. But if you had stayed in your original position, short YM, long NQ, you would have been making a lot more money at this point. Okay, now you're getting out of the position again. Why? Not only is the, I mean, if you're looking at the supply and demand, it's now negative. And it's positive on the NQ. It's negative on the strength, and it's positive on the strength on the NQ. You still have the arbitrage script pointing downward. All 3 lines are pointing down. You got the super bypass filter pointing down. And you got the oscillator pointing down. I can't imagine what you're seeing that I'm not. You should stay in your short position, not get out of that position. So you're up a couple $100 for the day, which is fine. The problem is you've got 9 contracts, and if your round trip is $5, you're already $45 in commissions, and there was no reason for that. Everything was pointing down. All you needed to do was stay in your short YMNQ position. Now you're going to a 5-minute chart on the arbitrage script. As I mentioned before, the best way to evaluate the arbitrage script is on the 1-hour chart, just like you are on all of the other charts. There's going to be ups and downs in the arbitrage script, but what you want to do is look at the hourly chart for overall trend. Yeah, so what you're looking at here is a flat arbitrage lines forming here, but all of the other indicators are pointing downward. So this is going to continue to go lower. The YMNQ is going to continue to go lower, so a short YM, a long NQ is the position to be in. And now you see it starting to move down, so now you take another short position. In the meantime, you missed probably close to another $100 in profits by doing that at a late stage. If you stayed, again, if you'd stayed in your original position, you would have made more money. Yeah, you're looking at that supply-demand index here, and I can tell you that that's probably a mistake. So, yeah, you might get a little bounce in the YM here. You're going to get a little bit of a bounce as well as the NQ, but typically these are very, very short-term moves. That's why we only use them for scalping. And so you're better off staying in your short position along with the 1-hour oscillator, bypass filter, band filter, and the arbitrage script. You still got that on a 5-minute, and I would highly suggest that you change that and stay with the 1-hour charts. Yeah, so you can see how quickly these the arbitrage script is pointing higher, and that's probably, the reason that you went long on this. But that is also a mistake. Okay, now you switch back to a 1-hour chart, and you can see that they're still pointing downward. So you want to stay in, yeah, you definitely want to stay in that 1-hour chart. Now you've taken the right position again. You're short 1 YM and you're long 1 NQ. And so you actually missed a number of different profit opportunities here. And of course, your profits for the day are declining. So you're jumping in and out of positions way too often here. You need to stick with the position based on the 1 hour charts. Everything's still pointing downward. The band filter is still pointing downward. The oscillator is still pointing downward. Prices are still pointing downward. You get a little bit of a bump here in the Diamond Strength Index, but it's still below the level of the NASDAQ. Okay, once again, you're probably looking at the YM and you're seeing the large number here on the supply and demand index. And so that may have you concerned about your position, but everything else is pointing downward. So you got out based on this. Again, the supply and demand index is plus 24. That is a short-term arbitrage opportunity, so you don't want to base it on that. You can take a look at the strength index. I think is a better filter for and confirmation of the position that you're in on the short side. If that is below the NASDAQ, which it is, the YMST is only at 0.02. NASDAQ is at 0.46, so it's quite a bit below the NASDAQ strength. As long as it's below the NASDAQ strength, you should stay in your short position. Okay, now you're taking a long position, and probably again because of the strength, the short-term strength index is at plus 25, and that's a pretty good number. However, typically institutions are not going to show up in the plus 25. They're like 50, 75, 100. Anything above that. 25 is still relatively retail traders coming in and buying the market. You've still got a very weak negative YMST contract here and a very long NQ contract. And a very strong NQ contract here. You also have the bypass filter lower. You know, the arbitrage script lower. Everything is lower. You should be in a short position, not a long one. Okay, you're getting a little bit of a bump here. You see that the strength indicator for the NQ is starting to decline. You're seeing a little bit of a bump up here in the YM strength indicator. And you're getting a little bit of a green here. So if you stayed in your short position this entire time, this may be a good time to exit your position. But you're already in a long position. So my recommendation would be to, you know, you've already traded close to 16 contracts today, which is way too much. You should have been short one at the beginning of the day, and then use this opportunity to exit once you start to see some strength in the YM contract and a decline in the NQ contract. So I'm looking to see now where you're going to exit this position, because everything is still pointing down. You've got a little bit of a bump up in the oscillator, but you still have a declining band filter. You also have a declining arbitrage script. I don't see this as a bottom of any kind here in a reversal. There's no reversal point here in my estimation. you still see, even on the chart, you can tell that the YM here is weaker than the NQ. The NQ is still pointing higher. The YM is pointing higher as too, but from the open, it's much lower than its open, and the NQ is actually higher than its open. So there's still relative strength in the NQ. There's little in the YM. All of the indicators at this point are still pointing downward. So this may be a temporary upward movement here, and it's not one that I would enter a position on, but it's one that I would probably exit a position on if I was short from this point, which I was actually. So you can already see that this little bump up here is fading very, very quickly. Everything else is still pointing down. Everything is pointing down. YM is starting to flatten out. NASDAQ is starting to flatten out. And you are barely positive for the day. I mean, based on the number of contracts you've already traded, it's no wonder. Okay, so now you've gone back to a 30-minute chart. Switching back and forth between charts, as I mentioned, is probably not a good idea. Yeah, it's flat here. That's why we're up a little bit on the YMNQ. But you really want to stay in that 1 hour chart period. And you can already see now that the strength is starting to turn down on the YM strength index. And it's basically flat on the NASDAQ strength index. And so that indicates that there's a weakness in the YM and some strength in the NQ. And so you're long, and you really should be looking at going short again at this position. Okay, so you're getting a little bit of a bump. So you're open here. So you did it. You did a pretty good job here. The only problem is, of course, is you see this minus 21 on the supply and demand index, which means that the weakness is coming into the YM again. You also see that the YM strength index is negative. Like I said, don't really pay attention to the strength the supply demand index. But take a look at the strength index. It just went negative. The NASDAQ strength index is still positive, even though it's pointing downward. If you change this to a 1 hour chart again and not a 30-minute chart, so you're getting a little bump up here, and so we did get a little bit of a bump up in the YMNQ, but I doubt it's going to last. I almost guarantee it's not going to last because, I mean, you're at 10 a.m. right now. You've been in this. You've been trading for about a half an hour. You're already trading like 16 contracts. You're way over traded. It's only 10 a.m. and you're trading 16 contracts already. Your profits for the day are up around 210, which is not bad. But at 16 contracts, you're already about $50, $60 in a hole on commissions. Way over trading here. So again, I would look at this as an opportunity to take another short position here, especially with the strength indexes, negative for the YM, positive for the NQ. Go back to a 1 hour chart here on the arbitrage script. Look at the oscillator. Bypass filter is continuing to go lower. So at this point right now, I would take a short position. You can see that the YM strength indicator is continuing to go lower and is negative. You've got the NASDAQ slightly positive still, heading down, but still slightly positive. Yeah, so that little bump up here and prices is starting to fade pretty significantly. You can see that the strength index is continuing to go lower. The strength index just on the NASDAQ just went negative, but barely so. But it's still above the strength index on the YM. Unfortunately, your long position here is starting to suffer. You stayed in it too long, and now you're down $75 on the day on the YM, and you're up 165. So you're only about $90 to the plus side for the day. But the number of contracts you traded will probably pretty much eliminate the commissions you paid on those eliminates your profit. So too much over trading. Please keep an eye on that. And you still haven't exited your long position yet. Okay, we're already going negative on the oscillator and prices, and now the strength index is much lower than the NASDAQ. The YM strength index is much lower, and you're still in your long position. That's a mistake. You need to get out of that much before this point. Okay, you're really tempting fate here. There's just so many things wrong with this current position. You long the YM and short the NQ. That's basically a long position on the arbitrage. And hopefully you'll recognize it soon and get out. There is actually not much to indicate that you should be staying in a long position here. There's no support for that position whatsoever. Okay, so there was a little bit of a bounce up. You could have gotten out, but now you're down about $40 for the day. And you're still in the position, so I'm not quite sure what you're thinking unless you walked away from your computer. So now you're down pretty much about $50 for the day. I'm just going to fast forward this to see. Now you're out. Okay, let me back up a little bit here to see when you got out of that position. Okay, so right here, you recognize the fact that you should probably exit your position. Okay, so we had a huge 112 on the supply demand on the YM, but at the same time, it's just barely positive and barely positive here, and we're pointing up here, and it certainly looks like the possibility is here for a rally, but then you got out of the position. So let's see what happens. But we've got the oscillator down. Prices are continuing to go down. It's below the momentum line. Let's see what happens and see if we get a little bit of a bounce here. But here's one thing about the volatility arbitrage trade that you have to really understand. Even though we could get a bounce higher in the YM, the NQ can bounce even higher than that on a percentage basis. If that happens, then the short YM's long NQ is going to continue to go lower. And so it doesn't matter what the price of the YM or the NQ is. The only thing that matters is the relative strength or weakness of those two instruments. And so if the YM is going higher and the NQ is going higher, but at a faster rate, then you need to be short that volatility arbitrage, short YM, long NQ. And that's exactly what happens. So we get a little bit of a bounce in the YM, but we also get a bounce in the NQ. And the bounce in the NQ is much better. So even though, let me just back this up a little bit, even though we saw institutional buying coming in, and we could have used that, it might have been a great opportunity here for a scalping position if you weren't already in a in the volatility arbitrage. We had a plus 70 on the NQ here, or the YM, sorry. You see 92, you see a lot of large numbers, I'll fast forward again, 45, 92, 103. And so we're going to get a bounce in the YM. And if that's what you're looking at, you have to understand that at the same time, the NQ can go up faster than the YM. So if you're just scalping, yeah, this is a great time to take a long position because you're looking at institutional buying at 103.70. Those are big numbers that institutions showing and indicating that institutions are coming in and buying. And so at 25.155, you could have gone long just the YM, but you're doing the volatility arbitrage trade, and so. What I'm saying is that even though YM goes up, NQ could go up faster, which would make your position profitable. So you can see that we got the bump up in the YM, which would have been a great arbitrage trade there, or scalping trade, based on the large numbers we saw in the supply and demand, and the YM went up. You don't have a position on right now, but the trend here for this trade continues to be lower. But we do have a little bit more strength here in the diamonds than the NQ. So if you're going to get into the position, maybe you could wait a little bit longer. Okay, now you went long. Okay, let me just back up here for a second. So you actually went long the YMNQ again, even though everything is pointing downward. There's absolutely no indication that this is going to go. I'm backing up her. So hold on just a second. Let me get back to the point where you actually made the trade. So you're seeing, once again, just like here, we saw a little green up bar here, and we saw the oscillator turn up, and you're thinking, okay, this is a place where the trade is going to turn around, so I'm going to go long YM and short NQ. But there's absolutely no indication that this is going to go higher. We still have the band filter declining. We still have the hourly chart, two of the lines, well, at least one of the lines is declining, but the two of them are negative. They're still negative here. We also have the YM strength indicator at minus 0.129, and we basically have the NQ flat. So we've got more weakness on the YM. Why would you cannot take a long position when the strength indicator is on the YM is much weaker and in negative territory compared to the strength indicator here, and you've got two of the three lines in the arbitrage script still in negative territory. So you take a long position. You've got continued weakness in the strength indicators. You've got two of the arbitrage lines still in negative territory. You've got the bypass filter continuing to go lower. You got a little bit of an uptick in the oscillator, which is quickly fading. It's not really going anywhere. It's just fluctuating right in here within a very narrow band. And so you're not making any money whatsoever. In fact, you're down again. You're down $65 on the open. You're up 25 here. You're down another $40. And so you're negative on the day. If you've got 18 contracts, over trading, so please keep an eye on that. Do not overtrade. Get into a position and stick with it until you see a sign of a reversal. And the sign of a reversal is going to be the passband filter declining about to or below the lower band line. And you've got the arbitrage script both coming up into positive territory here, or at least started to make a turn into positive territory. And you've got one line down, 2 lines up, but 2 of these lower lines are both in negative territory, which is okay, but you want to see some sort of a turn higher instead of just kind of, if you added these 3 together, the average is just going to be lower down here. And prices are definitely lower. So you really want to stay in a short position here and not take any long positions whatsoever. Now you've got a really sharp decline here in the arbitrage script. You've got a very sharp decline here in the strength index on the YM. And basically the NQ is flat. And so the YM is really going to start to take a hit here, I think, compared to the YM. And so you should be in a short position here. And you see a continued deterioration here of these 2 lines, and the arbitrage script really pointing severely downward. So caution is absolutely essential. And you must have seen that because you got out of your long position here. I'm just going to back up until you did that. So right about here, you're starting to recognize the fact that the YM strength is declining severely. And Q strength is just kind of flat. You got this pointing down, you got that pointing down. Everything is pointing down at this point. You should be short, or at least out of your position. So you got out of your position, which is good. Now you're short. Okay, now you took a short position, which you should have been since here, but at least you reversed your position after you saw this, and so that's good. For the day, you're down about $45, and you were up 200. So, and you've got too many contracts, so you've way over traded here. 20 contracts. Like I said, at the most, you should be doing 3 pairs a day, 3 pair trades a day, and that's about it. These tend to trend very well, and so even though you get a few, minutes in which, I like what you did there. So you changed the midline to dashes so you have a better idea of exactly where those midlines are. That's a great idea. I like that. Okay, so at least you're on the right side of the trade. You're short the YM, long the NQ. Yeah, so this proves that you're on the right side of the trade when you did that. We're starting to see a pretty sharp decline here again. We've got the arbitrage script. Arbitrage script gave us a heads up that this decline in the YMNQ is going to continue. Excuse me. The strength on the YM continues to go lower, and we've got basically a flat on the NQ. Okay, you did a good job in detecting that. The only issue is that you should have been short this entire time period. So now what you've done is you created lines here to indicate where exactly the lowest point of this decline is taking place. You put a line here and you put a line here where these lines are. That's a very good thing to do. You want to have a relative a measurement on the hourly charts to see where that low point is. You're up for the day. You took your profits. Let me just back up here a little bit. So you see that you've got a very large bar here. You've got a very sharp decline, about 24%. 24% is a pretty big move on an hourly bar. We would typically expect maybe a 0.5% in an entire day. And so if you're down 24% on a single bar, that's a very good move. And it's probably a good idea, especially when you start to see a little bit of a turn up here in the strength index on the YM, to take some profits at this point. And you recovered very nicely by taking that short position. And so you're up on the day about $295. And so at this point, you're going to go ahead and exit that position. So you did very, very well on that. If you were short from this point, you probably would have been up close to $500 to $600, or maybe even more at this point. But it's good to take a profits on those really, really big bars like that. That's fine. You can do that, especially when you're starting to see a little bit of strength coming in relative to the NQ strength on the YM. So you're up 295 for the day. So you recovered nicely, made a nice decision. Now you're going to measure it off to see exactly where this decline is going to stop. Maybe you're going to get a little bit of a bounce here because of the strength now showing up in the YM contract. And so, you may have hit the perfect low point there to get out of your short position. Yeah, you did a good job. You got out at the right time. You saw that strength coming into the YM, and you used that as an opportunity to exit your short position. So good job. So now you're thinking, okay, I'm going to take another short position here because it's working out so well. The only issue is that you still got strength here on the YM. But the NQ is actually stronger at 0.54. And the YM is still negative at 0.06 on the strength indicator. So it may not be a bad decision to enter another short position at this point. We'll see. All right, looks like you're out again here. Let me see exactly what I can see. Okay, so at this point, you're back to where you were. You've got a $70 open profit on your NQ contract, and you've got you're flat on your YM. But it looks like you're getting out of the position. For what reason, I'm not sure. Maybe it's the flattening of the here of the arbitrage script lines, possibly. If that's the case, then that may not be a bad idea. Yeah, I probably would have done the same thing. I would have taken that profit. So you had another $70, $80 open profit, $75 open profit here on the YM contract versus a minus $5 open on the YM. And you came back down to that low position again. So actually, I probably would have done the same thing. Okay, now you're up 3 3:55 on the day. Okay, and now looks like you took a break here because now it's 2 o'clock in the afternoon. So you took a little bit of a break. Yeah, we were at 11 a.m. Looks like you stopped at a typical time. That's a typical time I stop, 11:30. And you came back here at 2 p.m. All right, let's see what you do at 2 p.m. It looks like we're starting to get a little bit of an upturn here, but there's still, the arbitrage strip is starting to bottom. It looks like it's starting to bottom here. We're also hitting the lower band on the band filter. And so the pass is hitting the lower band here almost perfectly. Before I take a long position, though, I like to see that turn at least flatten out a little bit. The strength indicator is showing some strength in the YM relative, and it looks like it's gaining a little bit on the strength, but the strength is still much higher on the NQ at 1.0, and the YM is only 0.24. Let's see how you handle this. Okay, you're looking at that as a possibility. Okay, I know what you're thinking. You're thinking, let's take a long position here. It may be a little bit too early, though. Let's see. Okay, so you're putting in a support resistance line. So this is an SR line right here, and you're looking to see if it's going to go above that or not. You're getting a little bit of a green on the oscillator. You're hitting the bypass filter on the downside. You're starting to get a little bit of a flattening turn here, at least on the last couple of hours on the arbitrage strip. So I would definitely be looking at the same thing. I would be looking at a potential long position here. Yeah, it's good. It's looking better and better. You got a real flat to a slightly upturn here on all three of the lines on the arbitrage strip. You're coming down and meeting that lower band, and you're still below that line though. But I would definitely be looking for a potential long position here. Okay, now you've got a real upturn here. You've got a nice rounding pattern on this arbitrage strip. You've got one line above the zero line. You've got two that are rising here. Not much on the oscillator yet. Relative strength, you're starting to see the NASDAQ move down and the Dow move up. I would take a long YM short NQ position here pretty soon. Not quite yet, but pretty soon. Okay, same situation. Now we've increased the velocity here and the strength of the YM contract. YM strength and the NQ strength is pointing down. YM strength is pointing up. We got a nice rounding bottom here on the arbitrage strip. We're hitting the lower band on the bypass filter. We're starting to get some green on the oscillator. So if you're not taking a long position pretty soon, you should be. At least that's what I would do. Okay, at this point, you've got a very strong declining strength indicator on the NASDAQ. Nice upward movement here on the YM, nice movement on the arbitrage script here, and definitely, at the low point here of the bypass filter. You also, you drew your SR line here, and we're starting to rise just above that. So it's a very good choice here to take a long position. Looks like he did right about, I'm just going to back this up a little bit so you can see exactly which point you took it. You took it right here. So you paused it, you came back a little bit, and you're in the position now once it rose above here. Yeah, everything looks good. You got the strength indicator on the Dow moving higher. The Dow is currently up about 30 points. Got a nice strong uptrend here, and it's above the zero line. You've got the NASDAQ pointing downward and declining, but it's still positive, but it's declining. And you've got the upturn in the arbitrage script. Perfect opportunity, I think, to go long here. Absolutely. Yeah, the case is continuing to strengthen for a long position. Absolutely right. You're absolutely right. You made a very good decision here. So now you got a very sharp upturn here, a very sharp upturn on the YM strength, and the NASDAQ slightly turned higher, but definitely in a downtrend. You also have this nice rounding bottom on the arbitrage script, and now you got a very sharp rise in the strength indicator, in the oscillator. Okay, so yeah, you're doing very, very well here. Good instincts. The Dow is now up 63 points. You're up 380 for the day, 390. You're on the right side of the trade. Definitely, you want to be long this this pair. Relative, the strength here on the YM is continuing to rise very sharply. Relative to, we've already broken out of a new high here on the strength indicator. We have yet to do that on the NASDAQ. The NASDAQ is still below its peak here. So relatively speaking, the Dow is much stronger than the NASDAQ, even though they're both going up. This is what I mentioned before. Even though they're both going up, my mouse, the batteries on my mouse are going. There we go. So even though they're both going up, we've got the Dow higher and we've got the NASDAQ higher. It's the difference between those two that makes a profit in this trade. And so when we start to see it going higher like that, it's a much better trending trade than simply going long either one of these contracts or short either one of these contracts. Okay, so you're close to, you got out of your position, you're up 400 for the day. I don't think I would have exited quite that early. Maybe what you were looking at is the arbitrage script starting to point down here, but you've got the leading one, the yellow one is leading here, and so it's still pointing higher, and everything else looks pretty good. I'm not sure I would have gotten out, but I might have at that point. I don't know. It's hard to tell. I probably would have waited for the strength indicator to start turning down on the YM first. In any case, let's see if you did anything else. I think there's a few minutes. There's 9 minutes left in your video. Okay, you decide to get back into a long position again. Again, probably over trading. Could have stayed in the position longer. In fact, this is probably where I would have gotten out because of the decline in the YM. But at the same time, you're talking about a really good position to be in here. Very strong oscillator, up close to 20% already on this 1 hour bar. You've got a nice turn higher. You've got a yellow line here. At least one of the lines is starting to turn higher. The gray line is starting to turn higher. Relative strength between the two, the YM is definitely catching up. Another thing to think about is typically you're at 3 o'clock, typically around 3:30. The previous decline is very often reversed right around that 3:30 time period. So you're long in the position. Which is the right way to be. And you're still up pretty good. I'm not sure what you're looking at here. The super passband filter is flattening out completely now, it should give you additional confidence that this move is going to go higher. Also, your lines are still good, relative strength is still good. Everything looks good for a continuation of the up move. Yeah, so yeah, you were still in that up move. It looks like, I don't know if you got out. Did you get out before that? How did you make so much money? Okay, right there. Okay, now it's 4 o'clock. Right at 4 o'clock, we're at the end of the day. You're still long, as you should have been here. And you're up 735 on the day on the YM and up 560. So you caught that really, really well. So you made a very good decision to go long when it started turning here, and you saw the arbitrage script and also the increase in the strength in the YM. Very good decision. You got out, and excellent job. So you're up 730 and 560, which is about 1,000 at 1290. Nice job. My only concern is that you traded a lot of contracts. So you got 16 contracts and 17 contracts. You traded a lot of contracts today. You should have had one short position below the standard deviation line. You made a really good decision. You traded a lot in here. So I think you were afraid that the position was going to go against you. There's a couple times where it turned green, but there was absolutely no indication at all that the trade would turn higher on you until you got to this point. Then when you got to this point, the bypass filter was down here, hitting the lower band. You also had this upturn in the arbitrage script, plus you had the confirmation of the strength of the YM starting to pick up against the NQ. So good job overall. Too many contracts traded. Try to trade fewer contracts. Look for major turning opportunities rather than short-term trades because they'll eat right into your profits. And when you're in a position, try to stay in it as long as you possibly can, unless you see overwhelming evidence that you should exit the position. Otherwise, very good job. And I'll see you in the next video. Okay, bye. All right, guys, that was my critique for ashur today, and I hope you enjoyed it. Hopefully you got some insights into exactly how this position is traded, and I'll see you in the next video.